Alright, let's take a look at how easy it is to go into futures, set up a short position, and make some money. Now let's go. So basically, here's how it works. You're watching Bitcoin. This channel, right? It looks like this. It's between, 19,550, let's say 19,600 and 20,400. So it's going up and down and up and down. Each time it rejects this area, it slams back down. It takes 8 hours to a half a day or more, or in this case even a day, to get back down to the channel floor. Then it starts going back up, and then it rejected it, and now it's going back down with a big red candle, and it's fairly likely to retest this area. It's tested 1, 2, 3 times. The fourth test is going to be a bigger deal because the more times you test and retest support, in my opinion, the better off the coin is for being able to finally go up, break the channel, and rally. Now, here's the way it works. Sorry for the noise. When Bitcoin is going up, a lot of coins will follow in futures. So, and the same when Bitcoin is going down. So here's a good example. Let's take a look at OP. OP is not really the best example, but UNA is a great example. UNA USDT. So UNA, during the time that Bitcoin was going up in the channel, it went up like this, and when Bitcoin got to the top of the channel and rejected it, the RSI and everything was already really high for UNA at that point, as well as Bitcoin. But it strongly rejected it, tried to go back up, couldn't do it, and then full rejection of the price line on Bitcoin caused this short to happen. And these coins that had went up the most in futures, they all rejected the same area basically, in relatively speaking at the same time, and then turned into a nice short. All you got to do is, if you feel a short coming on, you wait for confirmation on the short, say it would be here, and wait for it to get down just a little bit past confirmation. You can use a stop limit order to place it, say, 659.5, and then down a teeny bit lower, 6.594. And then you would basically say, okay, well, I want to do 97%. That's going to leave me enough padding to pay for commissions and whatnot, if all the fees they charge you. They kind of nickel and dime you. It's not huge unless you stay in a futures trade for like a couple weeks. Then you have to make sure you have nice gains, to offset the fees that are charged by Binance. Now, this all translates over to Bybit as well. Bybit has maybe 70% or 75% of the coins that Binance has in futures, and they're also on Bybit. So, I would set my order right in here, and then say, 20x, and then once I get confirmation and watch it start going down, first of all, I need to back up. This take profit stop loss, TPSL, you've got to check this box. Because if you start a futures trade and you don't check the box, it's too late to have a stop loss. Always make sure this box is checked. Even if you don't set your stop loss, when your entry starts, you can still set it later. So my short would have been right here at 659.5, right about there, approximately. And then what I would have done is I would have waited a few minutes, and then I would have watched it go down, and then I would have set my stop loss as my entry price, 6.595. So if it pops back up, you're out of the trade. It would have actually done that here by about a penny approximately, but that's why you want to wait. So another thing you can do is you can set it just a tiny bit above, like say 661. That way, even at 20x, you still don't lose hardly anything. But this is a great example of a short. This is a strategy that I use a lot as far as setting the stop loss at your entry price. Now, take profit, you can leave that open. You can set it later by going down to, there's a little button underneath this column here. Once your trade is an open position, which will show up right here. And that's it. I mean, watch the trade. Don't get panicky. Don't sell it. Don't dump it. Just let your stop loss either do its thing. If the stop loss doesn't get hit, you're usually going to be in for some big profit. Now, 20x is a bit much for a new futures trader. I would recommend starting at 5x just to kind of get a feel for it. Unless you really know what you're doing, you don't want to over leverage yourself, because that's the number one way that new futures traders lose money consistently, is over leverage. So yeah, 5x to start out. Also look at the numbers. What's the percentage between each of these numbers? 6.6, 6.7. It's basically 1.5% between each one. So if you're doing a 10x, just a move between here and here is going to get you basically 15% profit. So that's really good. And if you stay in longer, you're going to probably make more money. But you got to be sure. You got to also check your support levels, resistance areas. There's going to be some little bit of resistance down here, but considerable resistance is in this area right here. So this was a nice short, just to summarize, and this is how you can really make money in futures without a lot of effort. So basically, in the end, if you get stopped out, you're only out for the fees, which are really small, the maker and taker fees, buy and sell. And that's pretty much it. So good luck. Let me know if you have any questions. Take care.